Monday, the 20th of May, the big story of the day, at the beginning of the week anyway, is the break up in gold. It's not a rise. Gold's been in a bull trend for quite a long period of time. Once we broke this sideways pattern here, that was my buy signal. We retested the previous high, which was 24.31. We've gone through it. We're holding above it. It's a clear buy signal in a bull trend. That's the daily chart. We're getting a little bit overbought on the daily chart, but that means nothing. Markets can go significantly higher even when they are severely overbought, and we're only just getting into overbought territory now anyway for gold, so I'm feeling very bullish. After the initial this morning, very early this morning, that was around 6 a.m. UK time, we did see gold pull back quite aggressively. It pulled back to retest that previous high. 431.79 was the low of that pullback. Clearly there were buyers there waiting to pick up gold at the previous all-time high, now that we've managed to jump almost $20 from that previous all-time high. We got very close to 24.50. So as long as we hold above 24.30, 24.20, the bulls remain very much in control of this gold market. Now, my targets for gold were 24.40 to 24.43. That's been achieved. Now I've got 24.56 to 24.58. I don't know whether we'll see that today. If we keep going, 24.70, 24.72, that 2-point area would be my next target. And finally, 24.78 up to 24.80. I have no idea of the timing of those targets, but I feel that we can reach those eventually. I'm probably even more bullish of silver than I am of gold. Silver's been in this consolidation pattern for such a long period of time. Finally looks like silver wants to play catch up with gold. Let me just put a couple of trend lines on here, give you some sort of idea. Look, we broke up through that trend line. We've been going sideways for nearly 4 years. So we burst up. We came back to retest the breakpoint. We didn't get quite down to the trend line, not that I've drawn on my chart anyway. And now we've rocketed. So we've beaten the 2020 high. We've beaten the 2021 high. When we go, this is the weekly chart, by the way, that you're looking at now. So really, if I put some fib levels on here, just to give us a bit of a roadmap, we're through the 50%. We actually now recovered 50% of the losses from 2011 down to 2020. You can see that we broke out of this, what would I call it, triangle pattern. But anyway, that's the trend line that's important. Could we get to the 61.8% fib at $35? Yes, I think we can. We've got some real good momentum. And I think it's about time silver did catch up with gold, which is, of course, hitting new all-time highs. And silver's nowhere near its new all-time highs. So for that reason, I really think silver could outperform now that it's finally got strong upward momentum. Okay, oil's another one that's been pretty much going sideways for a long period of time. This is the weekly chart. You can see we've been just trapped in this sideways channel since that's the last quarter of 2022. So a year and a half, we've just been trading sideways. I'll look for the daily chart now. Daily chart doesn't really give us a lot of indication of direction either. It really is just a case of caught in that channel. The moving averages are trending sideways on the daily chart. They're not really giving us any directional indication. You know, this doesn't tell me that we're going to go up or down. It really just says that we're going sideways. However, when you look at the 1 hour chart, now this does suggest to me that in the short term, at least, we have a bottoming pattern in oil. I could argue that that's some sort of double bottom. It resembles a head and shoulders with a double bottom, an inverse head and shoulders with a double bottom as the head, kind of. Anyway, I think that this is starting to look more bullish in the short term for oil. Look, on the hourly chart, at least, we've got the price clearly trading above the moving averages. The moving averages are turning bullish. We've broken above the downward sloping trend line, which is approximately 5 weeks old. We're holding the 500-hour moving average at around 80.5. We got to 80.39. So once we break up through 80.50, then I think we can start to accelerate to the upside, just as we've seen in silver. Obviously, we do have to hold around 79.50 area in order to remain above that trend line, to remain above the 50-hour moving average, the black line. So as long as we hold above 79.50, I feel very, very confident that the bulls will take control of this market quite soon. And as I say, we need to get through 80.50 for the next buy signal and really see some strong momentum to the upside. We get through 38.2% fib at around 18.90. Let's call it $81. That should be another positive signal for oil, and we can jump quite quickly to $82, $82.20, which would mean we would see then a 50% retracement of that move down from the middle of April. Middle of April, we did move down from 87.5 down to 76.5. So that was a big $11 move to the downside, pretty significant, more than 10%. Okay, I think I've said enough. I hope that makes sense. I hope that's helpful. If you've got any comments, put them in the comments box. I'd love to hear from you.